Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Daniela Couillet and it is Monday, the 12th of February. So let's take a look and see how markets performed today, because of course we did have a slightly mixed performance from US markets overnight. And today the Australian market, the COB 200, is closing out down 6 points or just over 0.4%. And the ASX 200 is yet to finalise the last trades, but it's currently trading down also just over 0.4% or 32 points to around 7,612. So a bit of a shame to see weakness here in Australia, but nevertheless, it wasn't all bad news. So let's move to the three themes of the day. And the cream rises to the top. And this is in reference to those companies in reporting season that are managing to start to put the runs on the board, as in the earnings, whilst they might be down year on year. And of course, I am referring to some of the retailers, but the results are better than expected. So some companies are showing the cream rises to the top, and we're seeing a great share price performance. But it's also Year of the Dragon, and although this started on the weekend, I just thought it was worth pointing out that the Year of the Dragon is one of the second best years when it comes to the Chinese astrology for markets. And so whilst we have seen markets around the world, the S&P 500 at new highs, moving through 5,000, there is potential in the Year of the Dragon for that market continuing to move high, which could take other markets with it as well. Now, it is the week of data dependence. Central banks continue to watch data and inflation reads. More on that soon, but just bear in mind that there will be a deluge of data this week, as well as reporting season, which will move not only stocks around, but also markets. So which sectors were in focus today? And healthcare was one of them. And CSL, unfortunately, down by 5% to around $289. And that is on the fact that its major drug trial did not come up as expectations. However, it wasn't all bad news, because Cochlear was in the green and so was Sonic, but ResMed and Fisher & Paykel also under some selling pressure. Looking at the energy sector, we can see a weakness there for Woodside, off by about 2%, and Yancoal off by over 1%. Just worth noting that energy prices were weaker after Israel, that it said it finished bombing South Gaza. Now, turning to IT, with that strong lead that we saw from NASDAQ on Friday, information technology stocks are shining today, particularly Altium and Technology One, up by over 2%, with Xero also performing well, up by about 1.4%, up to $113. Now, lots of corporate stories, and Audinate was one of them, reporting net profit after tax just shy of $5 million for the first half. And this compares to a $0.4 million loss a year ago. Revenue was up 48% to $47 million. Those shares up a staggering 20%. Aurizon, and we did speak to the CEO of Audinate, so you can catch that interview on our website. Equally, I spoke to the CEO of Aurizon Group, and they reported an over 80% spike in first half net profit, thanks to higher earnings from its rail network and coal haulage business. Those shares also being rewarded, up 3.4%. And it's been my day today, because I spoke to the Car Group CEO as well, and they lifted their interim dividend 21% and flagged further earnings growth after reporting a 34% pop in first half adjusted profit. Those shares up by 1.5%. Beach Energy also swung into first half net loss on the back of a large impairment charge against its oil and gas fields in the Cooper Basin, but nevertheless, those shares up 2.8%. And as I mentioned, CSL became the top loser on the ASX 200 today after its unsuccessful drug trial, and shares there off by more than 5%. So to get into some of those details, who better to ask than the one and only Henry Jennings from Marcus Today, who joins me now. Henry.
Hi Danielle.
Hi, happy Monday. Hope you've been having a good day. I guess it's a case of if you hold certain shares and the cream is rising to the top, you might be like the cat licking its whiskers.
Well, I've been watching the Super Bowl all day, to be honest, Danny.
I knew you were going to say that, Henry. You and everybody else is watching the Super Bowl.
Well, I guess Taylor Swift has made it a little bit more cool to watch American football. I have to say, I'm still scratching my head. I mean, they play for 4 quarters, well, they're actually 5 quarters in the end, which I don't know quite how that works. But yes, it's still a very confusing game. Everyone comes off saying they're so tired, but they only seem to have run about 30 metres the whole game. So it is a confusing game. But the Chiefs got up in the end. Travis Kelce, the winner on a number of fronts, I suspect. So that's been diverting a lot of my attention today. But you are right, Danielle. It has been a big day for some stocks, not least of which has been CSL with that disappointing drug trial. And this is not a small drug trial either. They did commit quite a lot of money, around $1 billion, to this new drug. So the disappointment was palpable, down 5%. I had been suggesting to some members of our newsletter that maybe $300 was a price to start taking some money off the table, unbeknownst to me, of course, the drug trial. But, you know, it had run from $230 at its low to $300. I mean, that is a big run on just really a change in sentiment, I guess, from those dim, dark days when GLP-1 was going to kill Vifor and the kidney drugs they have. So, you know, it was probably due for a pullback. I suggest that people were probably looking for a reason to sell it, and today that reason was that drug trial. So, yes, it's been an interesting day. As you say, cream rises. And what is really interesting, and we saw this last week, I guess, with Nick Scali, is that retail is not dead. You know, we've all thought that, you know, we're going to see that mortgage cliff, people slowing down in their spending. But no, maybe it's because we've got 500,000 new immigrants coming to Australia every year who have got money in their pockets and want to buy the things that set up a house, set up a flat, set up wherever their living arrangements. But certainly JB Hi-Fi has some pretty good numbers, and we do seem to be addicted to our toys, don't we? Our iPhones and various others.
I guess though, Henry, even though we do have brass in pocket, ha ha ha,
yeah,
it is.
Go, Chrissy.
The results, look, they're still down year on year, but I guess the markets have been really expecting even more dismal results. So it seems like a case in point if investors saying, well, if this is as bad as it gets, and you know we are at the top of the rate hiking cycle and interest rates are going to come down, look, 12 months down the track, surely earnings are going to be better for some of these retailers. I mean, is that a fair sort of takeaway?
I think it is. You're just pretending, really, with your quotes. But I think that is a fair kind of takeaway in terms of, you know, the market does look forward, and to some extent the results are looking backwards. So we're looking for the future. We are looking for a far more benign rate environment. I don't think we're going to see cuts that quickly from Michelle Bullock, to be honest. I think, you know, 4.5%, 5% is relatively, you know, that by historical standards, that's kind of where it should be. 4.35 from the RBA is probably not far off where the normal settings were through the 80s and 90s. So it's only the last decade that we've seen zero, unless you're in Japan. So retail clearly doing well in terms of capturing those dollars from the consumers that are spending. I guess, you know, when you look at the JB Hi-Fi numbers, Good Guys was down a little bit. Expectations weren't high. The stock had sort of peaked back in the middle of January around that sort of $60.50 level, and then come all the way back to $56. And now, of course, we're back up to where we were in mid-January. So, you know, we have seen a bit of a sell-off in retail going into these numbers, and we have proved, as we saw last week with Nick Scali, that retail is not dead by any stretch of the imagination. It has been greatly exaggerated, that death.
Yeah, indeed. And I'll tell you what was a cracker of a result, and really interesting speaking to the CEO, is Audinate. because they were one of the companies that had lots of problems during the pandemic, the lockdowns with the chip supplies, but they're coming back, which seems with a vengeance, and it looks like they have quite a growth runway there. Is that one that you've had a look at, Henry?
Well, it is. I know everyone loves Audinate and everyone says it's got a massive growth runway. And of course, they are pushing into new products. They got video coming on as well. Dante is their premium product for the audio-visual industry. And we've come out of COVID and everyone's going to conferences, etc. But when you look at the numbers, net profit, $4.7 million. That's not a lot of money, is it, for a $1.6 billion company?
Well, so, I guess it's that thing though, isn't it? It's a bit like Pro Medicus, isn't it? That company continues to be re-rated. I mean, the multiple on that one is just eye-watering.
Yeah, well, even if they doubled profit next year and made $10 million, it's still a $1.6 billion company making $10 million.
Yeah.
It's not cheap. It's we don't have very many success tech stories in Australia, let's face it. And the ones that we have got get an inordinate amount of coverage. Audinate has been a market darling in that respect. It has been doing very well. It's gone from, it's basically doubled since August last year, and shown probably no sign of changing that. But I do scratch my head and look at it and go, well, $5 million in profits and $1.6 billion market cap.
Yeah. Pretty eye-watering to say the least. Henry,
yeah.
we probably are going to have ongoing volatility as we run through this earnings season, which is not unsurprising. That's, the hits and the misses. Any particular stocks you think have the potential to surprise to the upside?
I think, one of the themes has been cost cutting. That's certainly one of the themes that we've seen from the US in terms of those tech stocks. They've had a lot more discipline. A lot more jobs have gone in US tech. I think things, especially in the insurance sector, could surprise to the upside. We've seen, one of the bugbears, I guess, of the RBA and the ABS, when you look at those inflation numbers, is insurance costs are going through the roof. Certainly got no bearing in terms of CPI raises. So that could be interesting there. And I guess some of even the more boring companies like Telstra could probably may surprise a little bit. The retail sector continues to surprise, so I wouldn't be averse to suggesting there's one or two surprises in there as well. And the banks, they've
had a great run, haven't they? I mean, questionable whether or not those share prices can sustain these levels, particularly the mighty Commonwealth Bank, which has really surprised everybody.
It's surprised everybody because it's very expensive. Australian banks are some of the most expensive globally in terms of price to book ratios. ANZ came out today with a bit of an update, and I have to say, when you look at the provisions and the credit quality, etc., all look pretty benign. The stock itself was one of the best performers in the banking sector today, so I don't think that's a bad place to be. I know it's been eye-watering in terms of the push higher. We'll find out on Wednesday, of course, but the fact that they had the mortgage war seems to have drawn a truce last year. I'd be interested to see on those net interest margins, but there is a lot of perfection baked into those banking stocks. So there is potential for a surprise from CBA. We've seen a changing of the guard of NAB as well. So there's plenty going on in the banking sector, but it is, if you're a new investor coming to the banks here, you look at it and go, probably wait for a pullback, but they just don't seem to want to pull back at the moment. That's the problem, Danny.
Yeah, not at this stage. Well, Henry, thank you so much for taking you away well from the post-Super Bowl whatever.
Who is Usher? Why is he so good? It was dreadful.
Was it dreadful? I have to go and watch it. I wasn't watching it, Henry. I've been working. I've been interviewing CEOs. So on that note, have a fabulous afternoon, and thank you for joining the COB.
Thanks, Danielle.
Okay, Henry Jennings there from Marcus Today. Now let's have a look at some of today's leaders, and we have of course been touching on them. JB Hi-Fi up by 7% to over $60. Lovisa also catching love, almost up by 4.8%, and it's over $25 again. Pro Medicus Wow, new high, $111, up almost 4%. Aurizon up 3.5%, 390. And Super Retail, again, another great retail stock doing well, up 3.2% to around $16.50. Now let's have a look at some of the laggards. Liontown Resources, and of course Albemarle's offer for that has been removed, off 8%. Fletcher Building in a trading halt pending a material earnings update, which does not sound like good news. Prior to that trading halt, the stock down 6%. CSL we've discussed, off 5%. Chalice Mining off almost 5%, and Star Entertainment off 4%. Now let's have a look at some of the small caps today. And Sarada up 15%, Brainchip up 13%, and Northern Minerals up 11%. And some of the laggards in the small caps: Iris Metals off by 16%, Synlait Milk off by 14%, Australian Vanadium down 8%, and Meteoric Resources also off by almost 8%. Now let's go to the stock of the day, which was JB Hi-Fi, and Gaurav Sodhi from InvestSmart and Mathan Samasamdaran from Deep Data Analytics joined us on the call to share their buy, hold or sell verdicts on the stock.
One thing I have learned is you buy these kind of retail stocks when interest rates are going up, because people are spending too much money. When interest rates are going down, people are not spending that much money. So I would say as good as it gets. I mean, all the weak retailers haven't really bounced as much. These guys have done well. You are getting, it, and everyone knows it. It's not like it's a surprise in JB Hi-Fi. So I'd be looking somewhere else.
And JB Hi-Fi is so dominant in the retail channel. Think about who's their competition. Harvey Norman is, if I'm critical of JB Hi-Fi, I'm scathing of Harvey Norman. That is a poor retailer whose results are very difficult to explain. But they benefit from that. So look, I've looked at those points, and I think those points have dominated my thinking, and I've missed that this is, we've been talking about monopolies, this is another one. Who's going to compete with JB Hi-Fi? They've locked up all the store locations. They're the lowest cost retailer in the world. That's probably good enough. So yes, I'm happy to take my lumps on JB. I've been wrong about it, but what an extraordinary business it is.
And let's check in and see what is happening overnight. And we will have a number of Fed speakers, including Bowman and Barkin speaking, as well as Bank of England Governor Bailey, and the US federal budget balance. And if we turn to what is happening tomorrow here on markets, we have the Australian Westpac consumer sentiment, as well as the NAB business confidence. We have the Japan year-on-year PPI and Japan preliminary machine tool orders, as well as New Zealand inflation expectations. And we also will have a suite of companies reporting, just to give you an idea as we go into tomorrow. I'll quickly pull this up, and while we're doing that, we might just have a look at in terms of what the market closed. And we have the COB 200, which was off around 6 points. Sorry, I think it was 6 points. We're not getting that. Let's get the ASX 200. That closed down around 30 points, or 0.4% to 7,614. And I was right, the COB 200 off 6 points, or 0.4%. And just a quick rundown, a number of earnings, including Challenger tomorrow, CSL, of course, we're reporting, IPH, James Hardie, Macquarie, Netwealth, Seek, Temple and Webster, to name but a few. Well, that is it for the COB. Just worth noting that the munis are a little bit weaker at the moment in terms of US markets. The Aussie dollar a tad weaker. But that's it for us here at Ausbiz. Have a great evening, and we'll see you bright and early at 10 o'clock tomorrow morning.